Eva Kaili, she has 4 minutes.
Thank you.
Saluto il
I'd like
Vicepresidente
to welcome
Moscovici a nome della
Vice President
Commissione
Moscovici on behalf of the Commission.
Prego, onorevole.
You have the floor.
Thank you. Commissioner, dear colleagues, one of the major challenges of this annual tax report for this year was to employ a more political view on the subject, rather than just following a standard path of doing business as usual. The emergence of the LuxLeaks cases during the drafting period vindicated our view and compelled for a political response. The European Parliament was necessary to take a political position and not to pretend that nothing happened. So this annual tax report is the standard vehicle of the European Parliament's Econ Committee on tax issues. The interest of the MEPs is proved by the numerous amendments tabled on the issue, urging for a clear political message. So there was a wide range of proposals. More specifically, we can underscore the focus on issues related to the requirement of social justice in tax policies. There was a wide concern on the taxation of capital, the taxation on income resources from interest payments, dividends and securities returns, as well as on the control of financial vehicles used to facilitate tax evasion. In the same vein, the financial transaction tax it remains very popular, and many colleagues made proposals on its enhancing and expansion, as well as about the use of its proceedings to augment either the budget of the EU or the Fund for Climate Change, even the European Fund for Strategic Investments. Moreover, the discussion indicated the persistent concern of the European Parliament on the corporate taxation, especially the Common Consolidated Corporate Tax Base, CCCTB, and the minimum corporate tax contributions. There were many proposals that linked also taxation to competitiveness of the European firms, as well as amendments about the tax treatment of the SMEs. Finally, although the European Parliament is still divided between those who favour coordination and those who favour harmonisation, the recurring coordination failures, as the story of SwissLeaks and LuxLeaks also indicates, it triggered many of our colleagues to stress the importance of more harmonisation on tax issues using the European semester and other motives as access to funding for honest taxpayers. So European Parliament, as it was indicated in the process of the compromising, attempted to show a responsible stance. There is strong support on a set of policies for assisting the fight against aggressive tax planning, tax avoidance and tax evasion, and also policies to minimise the tax gap. And there is also a wide understanding on the necessity for good governance in tax matters, for simple tax systems and tax policies that encourage entrepreneurship, strengthen competitiveness and support SMEs. Moreover, understanding on the social consequences of tax policies, especially for the economically weaker people. So there is also a set of issues that we can discuss further in the future, so as to share common ground for common policy initiatives. This set of issues includes the definition of tax havens, the sanctions to those who assist tax fraud, the country-by-country reporting, the OECD's base erosion and profit shifting, the FTT, and the shift of the tax burden from labour. One of the most important contested issues was the subject of the automatic exchange of information for making apparent the tax ruling practices and non-transparent agreements between member states and multinationals. So in the light of the current developments and the public concern, it's excessively important for the European Parliament to show its firm stance against any non-transparent practice that reduces the legal certainty of the taxpayers and distorts the intra-market competition. On this vein, we also welcome the prompt Commission's proposal on tax transparency to fight tax evasion and avoidance, which stresses that the provision of information no longer can be refused on the grounds of inappropriate disclosure of information and of a commercial, industrial or professional secret. However, we must be very sceptical as long as it not explicitly identifies the set of consequences for those who do not comply. So, in the overall, despite the disagreements, we can say that the annual tax report has a clear, coherent and to the point, and I'm closing, which sets the basis for a relevant, timely, fair, transparent, socially responsible and business-friendly tax policy for the European Union. Thank you.
Thank you, Madam Kaili. I do apologise, but you did have a little extra, and I'm afraid we are very much overrunning on our debate, so we have to be efficient on time. It is an important issue.
Thank you all very much for taking the floor and your contribution, and especially the shadow rapporteurs that made this annual tax report the most political until now, setting priorities, and we will keep working for more common policy initiatives. Allow me to add that unfortunately there is also a set of subjects we didn't all find common ground, as the environmental issues, although there are indicators that show the potential to generate growth and jobs, and also the issue of protecting and defending the whistleblowers, thanks to whom we know how the system works. Allow me to thank the Commissioner Moscovici for committing and listening to us, even to present more initiatives this year. He said until June. Thank you very much. And we also ask for the Council to listen to us, as European Parliament now has a clear, coherent and to-the-point position in this report, which sets the basis for a relevant, timely, fair, transparent, socially responsible and business-friendly tax policy for the EU. So thank you, and we hope that we will keep working together to move things forward in the near future. Thank you all very much.
Thank you. Thank you, Madam Kaili. Our debate is now closed, and the votes, colleagues, will take place around 7 o'clock.
Amendment. It's on. So, welcomes the swift implementation of country-by-country reporting for banks as defined in the 4th Amendment to the Capital Requirements Directive, calls on the Commission to introduce as a next step mandatory country-by-country reporting for cross-border companies, excluding SMEs, in all sectors and in all the countries in which they operate, including non-cooperative jurisdictions and tax havens, through an immediate revision of the accounting directive, whilst ensuring that administrative burdens are minimized. Thank you.
Vielen Dank. Gibt es Einwände? Das ist nicht der Fall. Dann lasse ich den Paragraph 37 in dieser Form in 2 Teilen abstimmen. Erster Teil, wer ist dafür? Wer ist dagegen? Enthaltungen angenommen. Zweiter Teil, wer ist dafür? Wer ist dagegen? Enthaltungen, das ist, glaube ich, angenommen. Ich überprüfe es trotzdem. Die Abstimmung ist eröffnet. Haben alle abgestimmt? Die Abstimmung ist geschlossen. Angenommen. Paragraph 39, ursprünglicher Text in 2 Teilen. Die Abstimmung ist eröffnet. Haben alle abgestimmt? Die Abstimmung ist geschlossen. Wir sind am Ende der Abstimmung. Ich möchte alle sehr herzlich, aber auch dringend bitten, die zuhören wollen, sitzen zu bleiben, die nicht zuhören wollen, zu gehen.